All right, everybody, what's going on? It's time for this month's edition of the Closing Table, and Dan is lit up today. He's on fire. He's ready to bring it live. I don't know if it's the excitement of the Phillies, excitement of the Flyers, the Eagles, or just excited to sell you a house and teach you about mortgages today.
Yes,
Dan, what is it?
I think it's because we have DeForge as our special guest. Here's a guy busy as all get out. Phillies are on, and he joins the podcast. There he is. Look at him. Looks
Hey,
good.
how's everybody doing today?
There he is. All smiles.
Yes. I just had a political rant before we went live. And
I heard it.
Yes. Yes. Thanks to my son for fixing my audio and getting us on here timely. Let me get in the middle of the screen here so people see what's going on. We know the Phillies are on, so watch us live, or you can watch this taped later on after the Phillies game. We going right to our special guest this month, and I greatly appreciate you joining us, DeForge, Homebridge Mortgage right now. Lots going on in the mortgage business. I'll say this out of the gate. I had a referral from an out-of-state mortgage broker, and he was with a company called Lower, and they laid off a catastrophic amount of people in the last several days. So there is a lot going on, and DeForge is a veteran, a very high producer, a very knowledgeable mortgage broker, and it services several different states. We'll get into that. So we wanted to bring Bo on this month. I think it's perfect timing just to get his feel and his gauge on what's going on. What are some products that might be able to help you in your home search? Homes are not going to stop selling. It's a changing market. So that's what we want to talk about today. Bo, let's start where everybody starts, which they shouldn't. Let's talk about mortgage interest rates at present. So we're seeing some uptick, am I correct, in the recent days?
They are continuing to go up, unfortunately. But hey, the people that have been in the business a long time, like 20 years or so, we've been here before. The way I see it, I don't have a crystal ball, but eventually they're going to come back around. They're going to go back down. They're cyclical. They're going up right now. Everything is indicating and pointing that they're going to continue to go up, but at some point they will come back down. The good thing that's going on right now is people are still buying. I'm still relatively busy right now. Of course, slower than I was when the rates were in the threes, but people are still buying houses. There's still people moving. There's still people, unfortunately, getting divorced. Things are happening. So people are still buying homes. So I'm fortunate to stay busy with that.
Is there, I guess, for some of the people that have been pre-approved for quite a while, say 6 months or more, that still are looking and haven't found a house yet, we go to what we call a buyer's estimate at closing costs and take a look at what the numbers look like. For some of the people that you're rerunning the numbers for at the current interest rate compared to, say, 6 months ago, I know it's definitely higher. What has been the reaction as far as, people's potential mortgage in this market? I mean, they could always refi. We know that they're going to go up a little bit at this time. What have you seen as you've been going to relook at some of the stuff for some of the people
all over the board? Some people are priced out. Unfortunately, they're just priced out. They no longer could afford to qualify for a mortgage. Other people are deciding, hey, I'm going to move forward. Yes, I will refinance down the road. The payment's a few $100s higher, but they're willing to absorb it because they want a house. Everybody, or most people, want a house or need a house. So they're able to still qualify. As long as they can still qualify, they're still going through the transaction.
Let's talk about briefly people being priced out. Do you see that in a certain segment of the market, or you just see that?
It depends. It's all over the board, but it's usually, I would say, under 300,000 sale price.
Because I do I do a lot of that. So we're seeing a little bit of an adjustment there.
We are. There's a couple things that are happening that are a little unusual. I've had 2 calls just this week on this where seller's assist was unheard of for the last 2 years, as you know. Now, something that's coming into play now is the buyers are asking for a seller assist, but the seller assist up to 3% is going directly to buy down the interest rate. For example, maybe the interest rate right now is 7.5, just using it as an example. The seller agrees to the seller assist, and they put that right to points, 3 points to buy down the interest rate to 6.5%. So we're seeing that. Another thing we're starting to see, or another product that I haven't used in years and years, it's coming back into play, is something called a 2-1 buy down. A 2-1 buy down, you still have to qualify at the higher interest rate, say it's 7.5%, but your first year on a 2-1 buy down would be at, for example, 5.5%. And then your second year would be at 6.5%. And then your third year through 30 would be at 7.5%. That's your actual note rate. Does that make sense?
Yes,
So
and I got a
buying
question.
down your interest rate for the first 2 years, and that's something that we do have that product. A lot of the mortgage companies are coming back to that and putting that out there. It could help. Qualifying wise, not really, but payment wise, because the payment shock is the big thing for people. That, holy smokes, it's going to be that much more now with my rate. You know, if I talked to you 6 months ago, my goodness, you know, it's a big difference now than it was 6 months ago. So this 2-1 buy down is coming back into play.
Let me ask you something on that, because we know eventually, like you said, these rates go up and down. They're going to come back down at some point. With the 2-1 buy down, are you locked into that loan for a certain period of time, or can you refinance it?
You can refinance it at any time, but the note rate is still, for just using a round figures, it's 7.5%, for example. But your first year, you're going to be at 5.5%. So even if the rates go down, you can still refinance, even though the buy down hasn't.
That's what was my
went
question.
Through year after year. Yeah.
So that's there's
no prepay. You're not locked into anything.
There you go. In the first how many minutes we've been on here, we just learned something. We got a new product here that I wasn't aware of in the recent market. Bay, I'm going to bring you in here because my wife says, well, I don't let you talk enough, but I'm going to say one more thing here. So the value of a local mortgage guy. So Bo is a partner of ours at Next Home Brandywine. He is a preferred business partner. That means he's been vetted heavily. He offers exemplary products and services, and the service level meets what we hold ourselves to at Next Home Brandywine, which is a high standard. So my relationship started with Bo 4 years ago when we opened. I'll give you a quick example of the service level. When you are going to offer on a house, you need a pre-approval. And, you know, you have to have that with the agreement of sale. And sometimes you have to reach out at odd times to the mortgage lender and ask them for, a pre-approval. You know where I'm going. I call him. He's at his birthday dinner and he picks up the phone at dinner, right? This is what we do, right? So this is the difference between Next Home and our business partners and some other people. We're very proactive. We're very aggressive. We're very pro-customer. That's why Bo does so much business. I said, listen, I need a pre-approval. He said, hey, I'm at my birthday dinner, but give me a half an hour. As soon as I get home, I'll have it to you. That's the difference. So if there's a problem, something comes up, you have a direct point of contact. I'm doing this loan. I'm doing this deal. Again, it was a referral from an out-of-state mortgage person. It got referred to a friend of mine. He referred it to me. We're having all kinds of problems. I can't pick up the phone and call Bo and say, hey, what's going on? Where are we at? What are we doing to fix it? So if you're quivering over 1/10 of a point and you're going with an online faceless mortgage broker, like with all due respect, like a Rocket or a Carrington, is the service level worth 1/10 of a point potentially here or there? I suggest no. I suggest you get a business partner. You ask your realtor. You ask other people that have taken a loan. You know, and Bo's always associated with top companies. He has great support system. He's knowledgeable. He's been in this business a long time. And I think, again, for our business unit, that's the difference that we offer. We're small and we have to have really good business partners to be successful, to hold ourselves to that standard that we demand for our clients. So again, and I appreciate Bo coming on today and joining us and talking some mortgages. All right, Bay, I'm going to leave it to you here, buddy.
Well, my big question, as soon as you said Bo was coming on, I was like, oh, perfect. Because from my standpoint in life now, where I have my own business, home-based business, and also do like the big thing now, especially with the pandemic, that many people has resorted to is doing like gig work, whether it's DoorDash or driving Lyft, et cetera, et cetera. How hard is it for either a gig worker like that to get a mortgage, or a person like myself who's running like a home-based like eBay business?
That's a great question.
It is a great question. You're considered self-employed at that point, and we just need a 2-year history of you doing that. So we look at your tax returns and what you've reported for income for the past 2 years, and that becomes your qualifying income.
Okay.
So 2 years tax returns.
So that's not bad then. It's very, very simple process then.
No, I've done several mortgages for people that have done Uber full-time, that kind of thing, DoorDash, that kind of thing. We can definitely use that income. It's self-employed income.
Wow.
So
Okay.
I'll give you a quick story. I had a buddy of mine work. This is a long time ago, 7, 8 years. He worked for the casino, gig worker, need 2 years verifiable. They ended up 3 days before the closing said, we can't close because we're not going to count his training time as 2 years verifiable. So it's literally like a 2 weeks short of the 2 years, and they wouldn't let him close.
Oh, man. What?
So if you go with Bo DeForge, he's going to tell you that ahead of time. He's going to give you all the details to try to make sure that we don't hit any pitfalls, and we don't have any issues with your loan along the way. But yeah, we had to actually flip the loan to another lender. I'm not sure if that one went to you with Joe DeFeo or not, but they're the things you need to ask your mortgage professional. Have a conversation. Look at the numbers with your mortgage professional. They're tied in. They know what the market looks like as far as the numbers and the rates go. But make sure you're comfortable. Make sure you have somebody that's competent and confident that's going to help you. I dare say a lot of these online companies are going to go by the wayside. I spoke to the gentleman yesterday that got laid off from Lower. Young guy, 26. He was devastated. I talked to him for a while. Super nice kid. You know what he said? They were based on refinancing. It was online, basically.
Any of that.
And that's so they were a house of cards, right? So as soon as the refi started to wane, this company just started to bail on the majority of their business. So Go ahead, Bo.
No, there's going to be a lot of consolidation. There's a lot of companies that have already closed. There's a lot that they're laying off thousands and thousands of people. Some of the bigger ones. I won't name any names, but I work for one or two of them that are laid off like 5,000 people. And there's a few that are just teetering. They're probably not going to be as many mortgage companies, even by the end of the year or going into the first quarter of next year as there are now. And I dare say, I'm not a real estate agent, but I see the same thing happening in real estate.
Major consolidation. We just got an email from corporate just laying things out, telling them they're trying to just adjust for the current market and kind of tighten things up a little bit. Our company financially stable. And I'll say this, even like if Bo just switched back and is with Homebridge right now, it's again, Jim Weichert used to say, people buy people before they buy products and services.
Yeah.
I'm with Next Home. I was with Weichert. I was with Century 21. People are going to buy Bo DeForge because they know Bo DeForge in our current market. They know he's a top mortgage professional, and they know he's going to guide them through and be an advocate for them along the process. Forget whose name's on the door. Like, he's going to associate with who he feels it best fits, for his business unit. And that's what's going on.
I was at a real estate staff meeting, another real estate office, a larger one. And I was talking at the group, and they were kind of, joking around with me. Oh, you moved again, and they're joking and laughing about it. And they got serious. The broker owner said, we don't care who you work for. As long as you're here and you're doing it, we don't care what name's on the door. So
right. And you got to navigate your market. You understand a lot of people jockeying for position to making sure that they're stable and their back office is stable and they can offer, that high quality of service that people come to expect. But again, people do buy people. My buddy Pat always tells me, I come to the real estate of Dan Pizzi. I don't care who you work for. I come to you because I trust you with all my real estate. So, I mean, that's a big deal. And I can't stress enough. I know people go local. Go with somebody. You don't have to go with our recommendation all the time, but make sure you have somebody local that you can physically get a hold of in person on the phone. A tenth of a point here and there in this market. Honestly, if something goes awry with your mortgage, that tenth of a point isn't going to mean much. So really make sure you align yourself with somebody like Bo DeForge at Homebridge. and make sure that you have a polished professional, especially what's going on right now. What I see on the real estate side is things are adjusting a bit, just a tad lower in the price points, and and we're really educating people on what their numbers look like in this current market as far as rates go.
Yeah, a couple more days on market now. Are you seeing that?
Yeah,
things are hanging out a little bit longer.
I have one in Barley Sheaf, 3 weeks on the market in July. To be 100% honest,
gone in a day.
Yeah, 4 people, and we're getting nitpicky now, right? So this week, because the rates went up, I don't like
the way it used to be.
And look, like you, I've been in since 06. So like some of the new people are getting sideways. We just readjust. So me and you have had experiences in those other markets. So we can adjust. In fact, the way we do business and our communication changes a little bit to make sure people understand what's going on, because things have shifted in a shorter period of time. And I think because it wasn't a slow rollout, that some people are undereducated on exactly what's going on. So make sure you align again with a mortgage person that's professional, with a realtor that's been through these markets, so we can kind of guide you through in this current market conditions.
Agreed.
What do you think, Bay?
Let me throw another question out there. So,
sure.
How about, again, people like myself who've been through a divorce, which has just decimated credit, rebuilding life. What is like the worst credit score you think you've approved?
Well, we have a minimum score requirement. It's a 580. Technically, It's a 580 for an FHA program. Our look back is the last 12 months. If somebody's life happens. So, everybody's had things happen in their life. But, as long as things are squared away in the last 12 months and, credit's reestablished, no late payments in the last 12 months, even if there's an oops, maybe one late payment in the last 12 months, it probably would be okay.
Right.
There's an FHA loan, 3.5% down. It's not necessarily a first-time buyer program, but most first-time buyers use that program. But yeah, we can get that done.
Let's talk about these. So people go online, they see a published rate, right? They see that loss leader, right? So we go through this, right? So I want you to talk about that a little bit about. So they say, hey, I went online and I saw that Rocket's offering right now 6.75, and your guy said 6.875. Let's explain to people that the credit score and some other factors heavily weigh on what your interest rate is.
Many things factor into a credit score. Is a big one. What your credit score is going to determine your interest rate, the loan to value, how much you put down, even the program. All those things factor into your interest rate. Obviously, on a conventional loan, the higher the credit score and the more money down, the better the rate. If we're just comparing apples to apples on a 30-year fix. But yeah, it kills me to see some of these rates online. If you go online and go shopping, it's like the Cadillac for $99 a month. You know what I mean? It's one of those things. It's not real once you get down to it.
Isn't it funny? Saying that though, isn't it funny back when you would look at the newspaper back, the auto section, and you would see the $99 a month Cadillac in 1977, you were seeing it as a kid, and now in 2022, you're still seeing $99 a month. It's like finally it clicked in my head a few years ago. Like, how's that happening?
I used to work at CVS, and we would have a loss leader end cap. So we would bring Tide in for $4. So they would get you in the store to buy the $4 Tide, and then you would buy other stuff and then you only had so many. They would send you 6 cases. Well, they'd be gone in the first hour and a half. And then people, it's one of these loss leader where you're trying to draw people in. And I think educating yourself on the mortgage company, the mortgage product, your interest rate, all the factors that go into it are important. Don't just look at the shiny thing that's in front of you, and you're looking online and you're looking. Fees and all have to come into play too. Like, sure. Right. So, Bo, maybe explain a little bit of kind of some of the hidden fees that might be present, when someone's applying for a mortgage.
Well, with an interest rate, it's simple. It's usually discount points or perhaps the other, what I call junk fees, or lender fees. Sometimes they're really, really high, and that's to help offset. Oh, it's 0 points, but there's $2,000 of other lender fees. Well, there really isn't 0 points then. But it's kind of like a bait and switch thing that I've seen out there. But the money pretty much costs everybody the same. So there shouldn't be a large variation between lenders. There can be a small variation that makes sense, but not a large variation between lenders. If there is a real, if something's too good to be true, it is. It probably is.
And one more from me here on the special programs. I'll use that. Might not be the exact right terminology, but like PHFA, like we did a deal with our friend Chevelle this year where she was able to get some grant money. Kind of, I don't know if that's still there, Bo, but kind of maybe speak to some of the potential.
Sure. A PHFA in Pennsylvania, great program. They actually have another grant program for somebody that makes a little more money. You know how the PHFA program that we did for Chevelle, the income couldn't go over, I believe it was 77,000.
Yeah,
we have one that you could make up to like 180,000 and still get that 5% grant, and you could buy a house, a $400,000 house with it. The kicker on it is it's a little bit higher of an interest rate. I believe the rate on that program today is 7.5%. But you're getting a 5% grant. Do the math on that on a $400,000 purchase. You know, it's $20,000.
So here's the difference with Bo. So I bring a buyer, Sharon Hill buyer, to Bo, first time home buyer. He could have just put her in an FHA or, you know, a standard program. And he said, wait a minute, I think she might fit the criteria in this PHFA. If I'm not mistaken, correct me if I'm wrong, we were able to get her a $10,000 grant towards her closing.
Yes.
You know, and there's some qualifications there and it stays on the loan and stuff like that. But Bo brought that to us because that is what was in the best interest of this client. I dare say others may or may not do that. But Bo's going to take a look at it and say, this is what's in the best interest for this client. And that's what I'm going to do. And that's what we do at Nexum. So the synergies there are the same. Like we're trying to make sure that we're doing everything possible to put our buyers in the best possible position to be successful in their transaction. Now, hey, I dare say, with all due respect, it may or may not happen everywhere. I mean, you know, we work strictly like that. Where, hey, you know, Bo's like, hey, Dan, I think I might have a program for Chevelle that really works out. It was perfect, and she was thrilled. You know, one thing I will say too is get the mortgage guy what they need. You know, when you book a deal, let's talk about right. So then the mortgage guy's a bad guy when you don't send in the stuff that you need and make sure, you know, the realtor can advise and give you some information, but we're not the mortgage expert. So again, if you need your boat, kind of just go over what people up front need to give you. And if without you receiving the proper information, there's not much you can do. You got to give the lender what they need to move the mortgage through and get it processed.
Basic information that most people should be able to put their hands on in a reasonable amount of time. I'm gonna sideline that for a minute and tell you there's some people that I'm waiting 10 days, 2 weeks for this information, which is completely unacceptable.
So Bo, stop a minute there and tell people what happens with the timeline we have timelines, which I think some people forget on the agreement of sale. And if you're not providing the mortgage professional,
you can lose your deposit for not cooperating.
Ooh. And you're not because on that agreement of sale, there is a mortgage commitment date, right? Which was moved around recently. It took me 20 minutes the other day to find it.
It's a little harder to find it now. It's at the top of the finance section now.
Last week I put it at the bottom. I looked at it. I couldn't find it. It's a little line at the top. I'm like, where is it? But there's a date that goes in there. And we won't get too granular, but the initial approval, the initial underwriting approval needs to be done by that date on the agreement. If you make Bo or any other mortgage professional wait 10 days, you're jeopardizing your mortgage commitment date because your real estate professional is saying this is generally the time frame we need to give the mortgage professionals enough time to give you a preliminary approval. So you need to provide the documents to your lender. It's funny when people give you what you need. Bo's the greatest guy in the world. The people that are kicking tires, the lender. It's not the lender, folks. It's you. You're not giving the guy what he needs. Right?
How many of those have we had?
Right. And look, my sister and brother-in-law just bought a house in Bethany, and they used Bo this past spring. Couldn't say enough good things. But those two are professional. They got the stuff to
immediately.
Right. So guess what? It went smooth as possible because you have a pro and a mortgage professional. You had two professional people giving him what he needed. And, and they don't always, praise everybody. They're like, hey, Bo's great, man. He got this
day one. They got everything to me on day one. Now it's not really some people are very complicated, but most people are not. It's very simple. 2 years, most recent W-2s, 30 days pay statements, 60 days bank statements, copy of a photo ID. That's it. Depending on their situation, self-employed, then we're getting into 1099s and we're getting into federal tax returns. And we have to verify large deposits. That one's a biggie. We've gone through the process before. Hypothetically, say they need $15,000 to close. I get a bank statement 10 days in. It shows there's like $4 in the bank account. Well, where's the money? Well, it's in cash in my house. We can't take that. It's got to be documented.
Let's talk about gift letters when it comes to that. So in some instances, people are getting money from an outside source, a gift from somebody.
That is allowed. You can get it. Typically, it's a family member. They can get a gift from a family member, but it's got to be fully documented. We have to see donor's ability. That means whoever the gift giver is, if mom and dad are giving a gift, we need mom and dad's bank statement for 30 days, showing that they have said dollars in that account. Proof of transfer. So we need a copy of that check, or if it's going to be a transfer from one account to the other, whatever. And then we need to see proof of receipt of funds from the borrower. So we need to see that in the borrower's account.
So let's go through that.
There's a paper trail, and then there's a gift letter that's completely filled out and signed by everybody.
So let's go through that for people.
Pay it back.
Yep. So you got the gift letter. You got the gift letter. Then you have to show it coming out of the account of the person that's giving you the gift. And then you have to show it going into your account. And don't ask why, because it's got to be documented all the way through. So we have people say, well, why? Well, my mother's just going to drop $15,000 in. That's fine, but we have to have everything documented. So
I don't want to give you my bank statement. Well, we have to have, that's the rule. We have to have donor's ability. Donor's ability is a bank statement from the donor showing they have $15,000 if that's the number.
Let's go back to PHFA for a minute. And with some like, and I know like, the farm loans, what do they call it? The USDA. Some of those have to go out, and I think maybe correct me, but VA, don't they have to go out to the government for final approval? And they might take a couple extra days
or a couple extra weeks, depending on how busy they are. PHFA is a double underwrite. As far as the mortgage companies that I work for, we're delegated. So USDA, FHA, VA, they're all done in-house. So the only one that's going to the outside right now is PHFA, which is required. It's a Pennsylvania state program.
Let's talk about type of lenders real quick too. Like you're a self-funded lender. So you want to explain that to people? Like some people are brokers. Some people are self-funded lenders. You got the banks. So there's some varying types of mortgage lenders out there.
Sure. I'm a correspondent lender. Basically, I work for a company that'll fund the loan. They even sometimes service the loan. They can sell the loan. A mortgage broker is somebody that works for themselves, but places the loan with, it could be one of many different lenders. And like you said, somebody at a bank, a loan officer at a bank works directly for that bank. They don't have to be licensed like a broker or like a correspondent lender, or sometimes they call them MLOs. We have to be licensed. They need a unique identifier number working at a bank, but they don't have to be licensed.
So what I found when you're working with some of the bigger banks, it becomes a little faceless because you don't have one. It's just one loan in the chain, and you don't have a direct point of contact.
There could be 10 or something. It's crazy.
Yes, and honestly, it might cause a timing issue with your loan. You go with DeForge at Homebridge. Bo's always available. Birthday, no birthday. He's going to pick up the phone. He's going to give you. So this is the difference, right? So this is why you want to use a DeForge potentially over another lender, because some of these factors that we talked about, you want to get to the table as easy as possible. So if you provide Bo with everything you need to provide to the lender, in most instances, when you're working with a professional like Bo, you're going to get to the table. And that, honestly, I get paid, Bo gets paid, the buyer gets the house, the seller sells the house, and it is a business. People sometimes forget, but this is the way, this is the way it works. There's 39,000 real estate agents. There's a ton of mortgage brokers. Align yourself with somebody that's going to give you the service level that you deserve. And we really, really pride ourselves on that. Myself, Bo, Ernie Homer, who's our home inspector, everybody that's a part of our group.
Your title company. Fantastic.
Yeah, she does a great. Shout
out to Aaron Abstract.
It's funny. We just had one. It was a third-party approval in Coatesville City. So I was reaching out to the other agent and I said, make a couple calls. I know that he wasn't. And just ask, is it on the docket? When do we think it's going to get there? Because what's going to happen is it's as soon as it's on the docket, they're going to want numbers and we're not going to be ready because we have to reorder search because we've been waiting so long. What happened the other day? Karen calls me up. The guy calls Karen and says, hey, I need this now. So I and then he got an earful from Karen because the communication wasn't where it should be. Our group is very tight, and we'll tell you in a blunt way where you need to be and why you need to be there for us to get you. You need to help us get our job done. Like if you don't give your documents to Bo, unfortunately, your mortgage is going to be stuck somewhere in the process. The real estate side, the mortgage side is very much a process, and we have some standards from the state and federal level that we have to follow, and check those boxes in order to clear your loan to close. Once you get your preliminary pre-approval, it goes to final underwriting. You want to just touch on that, Bo, like the last end process there with final underwriting?
Sure. When we issue a mortgage commitment, there's still conditions. Typically, we're still waiting on an appraisal. We're still waiting on title. So when all these checks and balances come in, we do a final verification of employment. You never know. A couple of days before closing, somebody could not be at work anymore. It's happening.
Somebody could buy a car.
Do you want to tell that story?
We're going to leave it there.
Careful on that one, though. Okay. Careful.
Do not buy anything. We're going to leave that where it is.
And then leave it there. And then we get a final clear to close. Once we have that final clear to close, we're ready to go. But yes, we did. In all fairness, we did have a client that we found out bought a new vehicle when they were on the way to closing. They had bought it the day before, a brand new Jeep.
And I dare say these vendors have done a ton for us. I mean, honestly, we really wouldn't be where we are today without our business partners. They've done a lot for us. And at the beginning, more for us than we did for them. And, we're still ramping it. They're just a tremendous asset for us to have the quality of professional that we have as a business partner. It means a lot to me as the owner of the company to have these professionals partner with us, to help provide the best possible service to our clients.
I appreciate that, Dan. And I got to tell you, working with you, you're on top of your people. Get Bo what he needs. I mean, you speak with the other real estate agents in your office. Hey, just make sure you tell your borrowers or when you're working with them, we're telling your real estate agents to get their stuff to Bo or whoever the lender is. That means a lot. That helps a lot. That just makes the whole process.
And I think we need to educate the agents more because I know I work with you and I know the quality, but we also have to provide the information. So, we have some people that potentially aren't on top of the client and educate the client. We have to go outside the box a bit and tell the client, look, this is the stuff you need to send to Bo. Yes, you're going to have to send your bank statements a couple times.
They get repeated emails, right, from me and phone calls, like repeated over and over and over again.
And what I tell you is, hey, if they're not giving you what they need, reach out to us. And then we're part of this cog. We're going to step in there and say, hey, look, you got to get the lender. What I do not like is where you're not proactive, you don't get the lender what they need, and then you complain about the lender.
Yeah.
Well, you didn't do it's your transaction. You need to have skin in the
it's
game.
always the lender's fault or the real estate agent's fault. You know that. You've been doing
and
this
listen,
a long time.
We've
it's
had
one of our faults. Or both.
And me and you, we've had problems with accounts and clients, and we say, hey, what do we need to do to fix this? And what happened? One time, literally, Bo and I went to the client's house 13 times. We bent over backwards for this client. And finally, we said, for various reasons, unfortunately, we can't do business with you. And Bo came to me and said, listen, you've done enough here. I mean, there's all these factors. We got to cut bait on this one where, unfortunately, we just can't service this client because they're not providing us with factual detail on what we need to get them to the table.
That was crazy.
You said it. I learned on that. You're the one that said, hey, Dan, enough. We got to cut bait here for various reasons.
Yeah.
Hey, Hub. Here I have, Hub. Dan, we have this. I want to put that up there. Hub is in the building.
Hub, my man, Hub, you're gonna be a special guest next month on a podcast. Hub's going to be joining us.
Hub has a question, which actually was going to be my last question of the evening. When I first moved to Nashville, and I was trying to buy a house, I was talking with a real estate guy, and he said it was possible for this. And Hub asked the question, so I'm going to put the question on the screen.
Sure.
Is it possible to buy a house with no money down?
Well, I know this says Nashville area, but yes, it is
In
possible.
general, we'll say.
There are several programs with no money down. There is a USDA program, which is a national, but the property has to be in an eligible area. You go on a website, you put the property address in. You have to meet the income and credit guidelines for the program. So USDA is 100%. If you're a veteran, you can do 100%. There may be a few rogue programs out there in different parts of the country where you can do 100% financing. The PHFA loans here in PA that we were talking about, they have that grant program, which is 5%. So essentially, you could do it for almost no money down. You need at least $1,000 of your own money into it, which is almost like no money down.
Sure.
But yes, the answer is yes. There are programs that'll you can buy a house with no money down.
So let's elaborate. Let's elaborate a little bit on the USDA. So where I live physically, I'm in a USDA area,
yes.
Which maybe, and I'm from Fallcroft, so I'm not as rural speak as it may be. So if you're in a rural area and you can go on USDA.org, I think, and look at the map to see if a house is in.
Yeah, it lets you put your address in there and it'll come up and it'll tell you that it's eligible. And if it's not, you'll see like an orange area where it says not eligible.
So explain for a minute most of the service areas for USA. It's more rural, right, for the most part?
It is. Like I don't think there's anywhere in Delaware County, Pennsylvania that's eligible, but
my area,
the state is. This area is. When I say Chester County, with the exception of like Downingtown, Westchester, right. Coatesville, the outside areas are all eligible.
So that's a good program. USDA.org, like Bo said, you can plug in your address. And if you're in a more rural area, you might. And again, there's qualifications that have to be met to get the USDA loan, but there are programs out there. So again, if you go to a mortgage professional, just like we talked about Chevelle, let the mortgage professional take a look at your personal situation and see what the best program is for you. Some people just want to put you in a box program. You talk
because
about,
it's easier.
That's what I'm saying, right? So I didn't come to you and ask you to give Chevelle a program or find a program. It just wasn't something that was articulated. But Bo came back to us and said, hey, look, this program fits her, perfect fit. She's going to get a $10,000 grant. There's some stipulations in the loan, but it looks like this will be in her interest. So
I'm sorry, go ahead.
No, go ahead. I'm done. Go ahead.
No, every state is a little bit different. And that's the other thing I wanted to mention. I am local here, but I do business in the state of Maryland, the state of Delaware, the state of New Jersey, obviously the state of Pennsylvania. I am also licensed in Florida and South Carolina as well. So I handle all those service areas.
And we do a lot of referrals. I've done 3 referrals this year. So again, mortgage referrals as well. You're listening to the podcast. You like what you hear from Bo DeForge, Homebridge Mortgage. You reach out to Bo. We'll get his information out there on this link. And he can help you in all the states that he just mentioned.
Great.
We got anything else, Bay?
The Phillies.
That's it.
Phillies are. I just checked. You see me? It's still the same score. So we were on here with both for 37 minutes, and the Phillies are still the same score. 4-2, bottom of the 5th, 1 on, 1 out for the Padres. I just gave you an update.
Thank you.
Dare say I should have been on the broadcast because I say what they say before they say it. So they must be getting my feed from my house here. So, Bo, again, Bo DeForge, Homebridge Mortgage. Bo, give your email and your phone number, where to find you. I didn't know Bo when I first started. We've built an excellent relationship. We got to pound them with a few more loans here to get up to speed here at the end of the year. And I can't say enough good things about our personal relationship has grown, our professional relationship has grown, and we do appreciate everything he's done for us. Bo, give them the particulars. Go to Bo DeForge Homebridge Mortgage.
I'll give you my cell phone number, 610-368-1131. And if you just Google my name, it'll come up. You'll see my website, everything. Just Google Bo DeForge and you'll get everything you need.
Great. Bo, again, Philly's on. You're always there for me.
I'm going to go watch now.
All right, buddy. Thank you. Best to your wife. Appreciate you joining the program.
Thanks.
Take care, Bo. Thank you.
Take care. Nice meeting you.
You too.
Bye-bye.
He's very good, Bay. He's very plain speak. He's good. I mean, you get him what he needs. He's going to get you to the table. And he's very learned. If there's a problem, he calls you up. He says, look, we got an issue. This is what we're doing to fix the issue. Again, in this market, I really think you need I was a rookie like everybody else was a rookie at one point. But either find a rookie that's got a good mentor like me, or get yourself a professional that's going to work through this. It's very fluid right now. It's a lot of changes going on in this marketplace. So let's quickly, we're going to get off of here in a few minutes. Sports scene up here, you're missing it down there. It's wild up here right now. I mean, the Flyers are there this weekend, I think. So
I think you're right.
21st. I was trying to get down there for that, but the Flyers are in Nashville this week. You'll get to see a little. Flyers are 3-0, playing good. Eagles, you probably see. You get to see these games, Bobby. They're playing great on a national level, and so you're missing home a couple weeks here with all this going on. We usually don't have all this activity up here.
Yeah, right.
Hopefully the Phillies can hang on and get to the World Series. It's going to be a tough one, either Yankees or the Astros. That's two great teams there. So. Yeah, so all things good in Philadelphia land.
All things good in Nashville land.
That's a good thing. So again, Dan Pizzi, Next Home Brandywine, 484-678-9262. Next month, our friend Hub is going to join the program. We'll see if we have any other special guests. We'll get to learn all things Hub Vigil next month. If he, I'm telling him on the air.
Excited.
I didn't know if I'm actually saying he's coming on the air, and we didn't even ask him yet. So, Hub, you're coming on the air next month, buddy. Join the program. We appreciate your support on the podcast. Every single month you listen in, and we do appreciate it. The podcast has grown thanks to Bay. Check out his website and look up Bay Ragni. Several different shows, from music shows to
just Google me.
Yeah, Google Bay. And we really appreciate him being a part of the podcast. We're going to cut it short this month, 40 minutes. We're going to go finish watching the Phillies. They're up 4-2. Hopefully they can win this thing. Bay, again, I appreciate you. Appreciate you coming on.
You, Dan.
Thank you to Bo DeForge for joining us this month. And we are coming at you, believe it or not, November will be the next podcast. Look for me and Bay to be doing some different things. We haven't been able to catch up yet, but Bay's going to be a little bit more involved in our marketing and advertising for Next Home Brandywine moving forward. Excellent. We'll see you next month. Thanks, Bay.
Bye, everybody.